Toronto's a bubble? Whoa, man. Oh my God. Are we going to crash? Stay tuned for this episode of Prime Properties TV where we're talking about whether it is going to happen. Good day, Toronto. Welcome to another episode of Prime Properties TV. I'm so glad you could join us here. In this episode, we're going to talk about what everybody's writing about, what everybody's talking about. Are we in a bubble? Are we going to crash? But before I get started, I have no crystal ball. What I'm going to tell you guys is about from my experience. Although there's a lot of media, economists, analysts that say one thing or the other on radio or on TV, I'm giving you guys my professional opinion on whether it's going to happen or not. You guys have to remember, since 2006, people have been saying Toronto's going to crash, but then there's also people who are saying Toronto's becoming super metropolitan cities like Hong Kong and New York. But before we get started, I want to debunk one myth for you guys, okay? There's no such thing as a Canadian real estate, okay? Real estate is all localized, and what I mean by that is, I'll give you an example. Last year, a lot of you guys probably remember, Calgary had that huge slip with the oil crisis and real estate prices crashed. Now, 3-hour drive away, still in Alberta, is Edmonton, and Edmonton was totally flying, which means that even in Alberta, the market is localized by the city. So what I'm going to be talking about today is Toronto and GTA real estate, not Canadian real estate, okay? So point number one, are we going to crash? First thing we're going to talk about is land. We're not making any more land. Interesting fact, New York, Hong Kong, we all know them as super metropolitan cities, right? Do you know what they have in common? They're on an island. That means no more land to build. Now, the interesting thing, well, not interesting, is Toronto's not actually on an island, okay? But let me illustrate what I mean by island, because we actually have no buildable land, which makes us an island. Alright guys, so here is a map of Southern Ontario. And what you'll notice is we're part of something called the Golden Horseshoe. Now, some of you guys may have heard of it because your friends and families are moving to cities in the Golden Horseshoe. These are cities that are like Oakville, Burlington, Milton, Oshawa. All of them are part of the Golden Horseshoe. Now, all the green stuff you see on the map, that is Ontario's green belt. Now, the green belt is actually the world's largest one in Ontario at 1.8 million acres. All the blue stuff, well, that's water. And you know what the common thing between the blue stuff and the green stuff is? You cannot build on it. What does that mean? Toronto and the Golden Horseshoe is on an island, okay? Now with 250,000 immigrants coming into Canada every single year, and of that 250, a lot of them wanting to be in that Golden Horseshoe area, and of those people, a lot of them want to be in the Toronto because that's where a lot of the jobs are. What do you think is going to happen with the demand when there's not enough land? There's actually even talks with the Canadian government where we're actually going to increase that amount from 250 to 300,000. So just think about the demand that's going to put on the Golden Horseshoe with us having no land to buy, okay? Point number two, interest rates and currency. Did you guys know when our interest rates are low and or our currency is actually low as well, we look like a discount thrift store from the outside looking in? Okay, I want you guys to imagine this. When you guys were Black Friday shopping and you looked at a US price, you're like, whoa, that TV's $500, that's so cheap. But because we make money in Canadian dollars, when we convert that, that's like, what? $650, that's not a deal anymore. But now you flip that on its side. Americans who make USD and they look in from the Canadian market and they're like, what? I get a 30% discount in Toronto real estate prices and it's a budding super city? Doesn't it make sense to put their money down in Toronto? So you got to remember, from the outside looking in, we are at a discount despite us locals thinking that real estate prices are so high. Point number three, I want to give you guys a comparison between the super cities, okay? Now, a lot of you savvy real estate people out there or my audience watching know that Hong Kong is one of the most expensive places to buy real estate. And they have different rules for buying. You know how we have 20% down or you can get 5 not? Did you know in Hong Kong, you need 50% down payment to buy something? Let that sink in for that, 50. And your amortization rate is your retirement age, 65, minus how old you are. That means the younger you are, the more longer of an amortization rate you can get. But here's the kicker. You don't have 50% down payment on one of the most expensive real estate markets in the world. So it's nuts to buy there. And a lot of us are thinking, oh my God, it's getting so hard to buy in Toronto now or in Canada with all the new financial policies that we talked about in previous videos. But you know what? It's not even as hard as Hong Kong, not even close. So if you're an investor in Hong Kong compared to an investor in Toronto, the way to buy a property in Toronto is so much easier. So that's why, you know what? It can only even get harder from that standpoint if we are going to become a super metropolitan city just like Hong Kong. Point number 4, stats. You guys didn't think I'd talk about market crash without stats. Nope, I definitely bring them in. Now, what I will say though is, I'm not looking at these stats to say, you know what, because we're trending this way, we're going to continue trending that way. Because I'm a big believer in saying that what goes up must come down. And that is the same for real estate. So what goes up in price in real estate will come down. What I'm going to address is how much of a down is there actually going to be, okay? Now, what I did is I took a lot of the old stats in the last 20 plus years in the Toronto Real Estate Board. I'll put it up here. And you'll see that a lot of these numbers have been trending up and more transactions happening. But being a nerd, what I did is extrapolate all that, put an Excel for you, and you'll see that there's red and green for going up and down. You see there's a part of in the duration of the years where 1989 to 1995, it's all red because in that time, there was a market bubble crash or bubble burst. Now, a lot of the Gen Ys or millennials may not remember it because they were too young at that point. But any of my audiences that's a Gen X or baby boomer, you'll remember in the 1990s, that's a really, really tough time when everything plummeted. Like, when we calculate all of that, real estate prices actually dropped 35%. Okay? So you can see things do go up and things do go down. Now, what I'm going to address to you right now is ever since 06 of that last crash, you can see prices have been going higher, 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 and higher. And the transactions have been going higher, 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 and higher. To almost the point where everyone is saying, you know what, in 06, it's going to crash anyways. They're waiting for it. But nothing's happened since, and prices have been climbing crazy, 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 crazy. Now, if you think about it, if you bought something in 06, it says here that your prices have probably increased about 60%. That's very conservative. Frankly, if you bought something in 06, your price has probably doubled, if not even more, depending on where you're going to be. That's bonkers. But if you take that in comparison, take it to the 7 years of the crash, you'll notice it's only 35% depreciation. Now, you think about it. If you bought something in 06 and you held it, and let's say tomorrow, it crashes 35%. All 7 years of that depreciation crammed into one day overnight. Your property that you bought in 06 is still up in the black. It's still positive. You've made money from it. And you have to remember, it's not like the 35% is going to go crashing down all over. It's going to be smoothed out, especially with the Canadian government making sure that there's no huge major crash that happened again in 1990. So let's do the math. If we are going to depreciate, are we going to depreciate enough in such a way that it's going to be like catastrophic? I frankly don't think so. And for those of you in the audience that said, you know what, but if I buy now and it crashes tomorrow, then I'm going to lose my money. I don't know what to do. Let me ask you this. If you're saying I'm going to wait to the market for the crash to buy something, back in 08, the US had that credit crisis and everything crashed and went plummeting down. Prices in Detroit, Miami, and Florida, they were all-time low. Did you buy anything at that time? Probably not, because it was kind of weird. Now, last year, very, very recent, Calgary plummeted because of oil. Did you buy anything in real estate at that time? I don't know. You can ask yourself. And if I ask you now, in Toronto, if tomorrow the market took a swing for the other way, are you going to buy anything in a downturn? So my question to you is, think about it. Are you really going to wait until something crashes and goes down? And even if we're going to crash, I frankly do not think we're ever going to see a detached house under $500,000 again in Toronto. Remember, we're becoming a super metropolitan city, and even if we do see a little bit of a slump, there's going to be enough of demand where it's going to bring the prices back up and rebound very quickly. All right, guys, I know it's been a long episode, but what is the verdict? Here's my verdict. And remember, I can't predict the future. No crystal ball. It's gone, okay? But I frankly do not think there's going to be a crash coming anytime soon because of the sheer fact that there's so much demand for real estate in the golden horseshoe. Now, when there is a crash, well, we're going to call it a crash or maybe a slight hiccup in prices, what that's going to deem us to be, I don't know how much of a dip Toronto real estate prices or GTA prices are going to take a hit, but I'm pretty confident that they're going to rebound up and we're never going to see a detached house price for under $500,000 again. So that is my summary of whether we're going to have a market crash. If you want to learn more about how the market did, make sure to stay tuned to next episode of Prime Properties TV, where I'll be doing an in-depth analysis of how 2016 did in GTA and Toronto. And thank you guys again for watching. And if you learned anything or simply just like the video, make sure you press subscribe to PrimePropertiesTO. If you have any questions or any comments, you can leave them in the comment section below or contact me directly. Our team will do our best to answer those questions for you. And remember, make sure you share this with your family and friends, because you know what? Everybody's talking about market crash anyway. So make sure you get that education out to the end consumer, because I always say an educated consumer is the best consumer. I'll see you next time, Toronto.